Hi, you're watching ET Markets Live. I'm Neha Vashishth Mahajan. Welcome to a brand new episode of ET Market Wrap, where we discuss what happened in the markets this week along with market outlook for next week. I'm here with Mr. Ajit Mishra. He is the SVP Research at Religare Broking Limited. Thank you so much, Ajit, for taking our time and joining us today on ET Markets live stream.
Thank you, Neha. Thank you for having me.
So let's quickly start our session for today and let's start with what's happening in the markets right now. So this week, the markets were on a seesaw, alternating between gains and losses. Now, the key triggers included Moody's downgrade of the US government's credit outlook, along with some kind of movement in the defense stock. Can you help us break down what really drove the volatility this week?
Right. So, Neha, last week, if you remember that there was strong gains, roughly around 4% kind of a gains in Nifty and Sensex, with stability on the global front. With news of U.S.-China trade deal, plus the geopolitical tension de-escalating between India and Pakistan. This week, we started on a slightly a sluggish note with the U.S. markets indicating possibilities of challenges on the fiscal side, because be it the Moody's downgrade plus the lack of any interest, substantial interest in the U.S. bonds, uh, possibility of U.S. tax bill, further worsening the situation, fiscal situation in the US. So all this put together, especially from the US markets, turned negative for us. And
Hmm.
at the same time, the FIIs, we were seeing consistent buying interest. They also turned negative during the week. So domestically, as of now, I'm not seeing anything major happening at our end. But yes, it was more of global clues which triggered all this volatility. And now we are closing almost on a flat note.
Absolutely. So, going beyond geopolitical tensions and FII activity, what is your take on the near-term market trend right now? Are we leaning more towards a bullish or a bearish phase in the coming weeks?
Right. So, see, a week of consolidation every now and then, and amid all this choppiness, the tone still looks positive. Means it's been almost a month now that we are seeing this recovery. The key sectors they are participating means they are holding strong. So banking and financials, to start with. Then we have other sectors which are also joining in from the rate sensitive side and otherwise also. So it's a broad-based
Hmm.
participation, and plus, if you exclude this weeks of FIA sellings, things were okay on that front also. And DIs they are anyways contributing on a regular basis. So amid all this, I don't see any reason that market would see any major declines. So there could be a bit of a consolidation due to the global overhangs and
Okay.
upcoming data and other factors. But overall, I expect this positive tone to continue with a bias on the positive side.
All right. So let's also talk sectorally. Which sectors do you think are bullish right now or could be bullish in the future in the short term? And which ones do you think could underperform or stay under pressure?
Right. So, see, last week also, in fact, I was eyeing that banking after the strong outperformance should lead the next leg of the up move. Means IT, we have seen recent rebound after the underperformance, and banking and IT put together, they hold maximum weight in the index. So, I believe that banking and financials they'll definitely be on the radar after almost 2 3 weeks of consolidation. Then we have energy, metal, and reality pack also, wherein we are eyeing like renewed buying interest in the coming week. At the same time, auto, pharma, IT, they might remain subdued or underperform in the coming week. But selectively on the stock specific front, in those baskets also we may find opportunities.
All right. So I have a follow-up question regarding defense sector. So we all saw the kind of rally that came into defense sector, India's defense sector in the last few weeks. I want to understand from a long-term perspective, what should retail investors do in terms of defense stocks, if they're looking to invest for maybe say 3 to 5 years or maybe over 7 years?
Right. So see, long term, definitely this sector has gained traction, of course, for the multiple reasons, because the indigenous push and the success of the recent developments
Operations for
or
you
the,
as well.
yeah, yes, so all this has strengthened the capabilities and focus on indigenous development. At the
Hmm.
same time, government is focusing on the export side also now. So if somebody is like considering 2 3 years of time horizon, definitely they can consider, but focus on the companies which has defense export capabilities also. So stock like
Hmm.
HAL,
Hmm.
these are the candidates basically which holds prominent position in that space.
All right. So, are there any important macroeconomic data points or global events that investors should closely watch out for next week, especially?
Right. So see, focus will remain on US because we have FOMC meeting minutes scheduled next
Hmm.
week. Then we have US GDP data also lined up in the coming week. Then we have on the domestic front, India GDP quarterly numbers are scheduled. And in the following week, there'll be updates around monsoon also, like the progress of the monsoon in
Hmm.
the domestic front. So these are some of these key important factors that would largely dictate the trend, alongside, of course, with the news around the trade deals and the FIA positioning.
All right. Now, let's come to the main part of our session, which is discussing about technicals. So, what are the key support and resistance levels for Nifty in the coming week, and what is the current tech analysis pointing at?
Right. So, like, what we were sharing and, anticipating that after the last weeks of up move, there could be a attempt of follow up move, provided the banking also support that trend. But it turned out to be otherwise, means we spent the entire week in the consolidation. The good part is that yesterday we've tested the crucial support of 20 EMA around the daily chart, which is placed around 24 to 450, 500 zone now. Uh,
Hmm.
until we break that mark, the bias would remain on the positive side. So, in case if any level that somebody has to keep in mind, that would be 24,500 for the next week. As long as we are holding up this mark, one should continue with buy on dips approach in the market. Upside 25,200 to 25,600 is something that the market may attempt. In case if let's
Okay.
say we slip below 24,500, then probably the bias would turn from positive to sideways to slightly negative. In that case, 24,100 will be the key support area. So as of now, bias on the positive side, 24,500 in the Nifty is something that you should keep a close eye on.
All right. So before we close our session for today, one last thing I would like to discuss with you is about retail investors in India. So what should retail investors focus on right now? Any strategy or mindset you would recommend in this kind of market?
Yeah, so see, we were discussing about defense stocks, railways, and the other themes which have done exceptionally well. So when you are chasing momentum, you should be clear about, in case if what if the momentum fizzle out or there is some consolidation. So
Yeah.
make your entire trade beforehand, means you should have a clear idea about your exits also. You cannot be lenient that in case if there'll be a substantial movement in the stock, it might continue for forever. So in case if you are chasing momentum in these sectors which are seeing noticeable strength, keep on trailing your stop losses on rise and keep on booking also profits, because market will continue to offer opportunities within a consolidation or a dip in between. At the same time, focus on sectors or stocks which are showing relatively higher strength, means which are anyways trading at their record highs in comparison to what we are seeing in the benchmark. So banking,
Hmm.
financials, they are the first one. Then we have select stocks from the other sectors also, wherein we are seeing stock forming a record high. So focus on the stocks which are relatively high strength instead of focusing with stock which are still reeling under pressure around their 52 weeks low, in anticipation that they might also witness some recovery. So this is something that the retail investor should do, at least in the current market scenario.
All right. Well, this marks the end of our segment for today. Thank you so much, Ajit, for taking our time and joining us today on ET Markets live stream.
Thank you, Neha. Thank you.
Thank you. Thank you, everyone, for joining us.